Okay, welcome everyone. Today is Thursday, January 22nd. I'm Michael Boutros, currency strategist with SB Trade Desk. Guys, good to be here with you this morning on this ECB interest rate decision. We did get a hold, as expected, no interest rate change, but the devil's in the details, and certainly we'll be looking at what Mario Draghi says during his presser. It'll be going on simultaneously during this webinar, guys, so I'll be giving you highlights. We got video footage. We've got all that we need to sort of stream and go along here as Mario goes through this presser. Where we stand right now with the euro, here's what we're looking at on the dollar chart. I know myself and Jamie, we've kind of been straying away from trading the euro actively, ahead of this decision. Major key support on a closed basis that I've been focused on is 115.30. The near-term resistance region we need to get through, we tested the last couple of days, and that's right up here at 116.50. So we'll see what Mario Draghi has for us in just a couple of minutes here. Guys, throughout the course of the session, if you have any questions, trade setups you'd like to review, feel free.
Initial jobless claims fell 10,000 last week to 307,000.
Okay, initial jobless claims coming in for the United States broadly in line with expectations. So we got a print of 307. We were looking for a print of 300,000. Not expecting that to be a market mover by any means. Focus continues to shift here on Draghi. So we'll see as he looks like he's almost ready to take the stage here. Some trade setups that we've been following, guys, on the scalp basis. The dollar-yen setup has still been the one I've been most active in. I've been flat since yesterday. I tweeted that when we took out the rest of that trade on this pullback right here. But certainly a nice trade from that 118.80 level. The resistance region that we noted last night is still in focus, and that's 118.09, 118.10. We've continued to reserve that as our near-term bearish invalidation level. Excuse me one sec, guys. Let's just save that, make sure we don't have any issues here. But the dollar-yen. So you saw a quick peak above that 118.09 and overnight trade. Momentum held right as a rock at 60 and then came right off. You actually had a decent trigger there to put you on the short. This was in wee morning hours here in New York, so I couldn't get involved here. But inevitably, we're still looking for a possible move lower here in dollar-yen, in my opinion. So we'll see the bullish invalidation level in general to really open up to the south side. It's going to be the 117 barrier, which is right here. Remember, this is the opening range low for the week. Here's the weekly open. There's also the median line parallel, lower median line parallel, as well as a longer dated 618 extension off the highs here they see in blue. Okay, it's off the high that we made in December. So that's sort of the focus range here to open up further south side trades for the dollar-yen. Again, if we do push through the median line bisector on the upper side, you look for a rally back into that 118.80 threshold to the up. All right. Okay. Sorry, guys. You might hear me get quiet for a couple of seconds. Just reading through the headlines here. It doesn't seem that Mario's up just yet. But certainly we will keep an eye on that. Okay. So that is the dollar-yen. I'm going to just go through the trades, guys, that we've been following on the scalp side as we wait for Mario to get started. If you guys have any trades that you're currently in or you're looking to take advantage of as we head into the ECB, do let me know. The only announcement that we got this morning, guys, that there was going to be further monetary policy measures will be communicated by President of the ECB at the press conference starting at 2:30 p.m. CET time. That's 8:30 Eastern, so certainly we'll be looking for what new measures Draghi's going to release and if it's going to really quell market concerns. There are a lot of concerns that he's not going to come out with the sizable bazooka that essentially Europe does need to get themselves out of this debacle. Moving away from the dollar-yen. So I still think you might get another stretch here. We'll see if we can fade that on the dollar-yen. Aussie dollar has been a snooze fest. I put a pretty lengthy note here yesterday, guys. Look, at the end of the day, we've been highlighting that longer duration chart on the daily, okay? And heading into the start of the year, I put that link in yesterday's scalp log, the 80, 67, 81, 80, 18. This is the level that we start off the year noting, guys, major key support here. Curb your appetite for the short side of the trade. you never got a close below it. Again, bring this into a close basis. You never really saw a crack below that region. So that still is major key support on the daily basis. This is why I haven't really been, cool with scalping the short side of this trade, even though the weekly opening range clearly broke yesterday. So on this type of break, you're looking to take the short side of the trade just on an objective view of the weekly opening range, which is very well formed and well defined. And objectively, again, sub 8160, you look lower. And this is just as per our discipline, guys, as per the basic opening range strategy. Now, the problem is, and the reason I haven't been participating on the short side here, is because of that major key daily region. And as we head into this, short exposure is at risk. It's the same exact setup from earlier in the year. So we'll be looking to see if today offers anything here. I don't necessarily think you get any major Aussie price action. We'll have to see if market sentiment in general takes a hit. But as long as you stay, just above this 80.67 region, I'm not really going to be interested in pressing shorts. If we close below this, sure, you look for that next leg down. But from a scalp prospect, I'm really reluctant to take any short exposure below these regions. If you guys remember the note from Tuesday rather, we were looking for a possible entry on the long side right here, right between the lower median line parallel and a basic trend line support off the yearly low. Well, we broke and sailed right through that. So right off the bat, your possibility here for entry on the long side was kind of wiped out. And, I'm going to hold a neutral stance here on the Aussie until we get through today's event risk. Jay Jackson saying short half a position on Kiwi Yen from 89.10. Certainly, let's take a look at that. Okay. Let me ask you a question. What's your target on that? Short half a position of Kiwi Yen from 89.10. Because we put, I'm not sure, was this on SB or? No, this report was on, I put this report on Daily FX yesterday. And I do think sub 90, you do look to play the short side of the trade. Look, this was a very, very nice break here. The weekly opening, or the monthly opening range broke very clearly on the 13th. This gave us a downside bias looking for that late month low. We came back, checked the underbelly of the opening range low. That held, gives you further conviction on that. And certainly the break below 90 keeps us bearish below this region. On the intraday chart, I think it looks pretty compelling too. I'm not really crazy about that entry, to be honest with you. I'd be more interested on a rally into like 89.50 or even, back into the median line to try to press it against 90. So I'd use some caution here. I don't necessarily have a trigger to put you into that position. Let me ask something real quick, Jay Jackson. Was that, he says no target and no good reason to be in. Jay, did you take off half the position and you've been in it, or are you just entering a new one? Because if you're just putting on a new position here, Jamie covered that yesterday, sub 94 shorts, at sub 94 shorts. Okay, Kevin says, quick reminder there on Jamie's setup. So sub 90, you want to stay bearish. As far as a scalp concerned, a new short from here. Don't necessarily have a trigger, but you'll see maybe you'll get that stretch into 89.50 would let us get back on the new, on the short side of the trade. Remember, your near-term profit, or your near-term support objective is right here, Jay. So you're not too far off, man. Just want to keep that in mind. And again, on the daily chart for the Kiwi Yen, you got a lot down here. You also have the 200-day moving average just below at 88.52. Okay, it looks like Mario Draghi is setting up. Still no comments as he hasn't taken a seat yet. But we are getting some headlines from Merkel says can't just move on from a breach of the Ukraine territory. Islamist terror is one of the great global challenges. These are all fluff things, guys. But it does say that ECB is going to be making an independent decision today. So certainly they continue to build up the rhetoric and the expectation that we'll see them come out with a sizable QE package today. Guys, I do want to read a quick note here that is hitting the headline. He says Jay Jackson saying it's a new position during the Euro session. It's just not a good trade. I do this too often. So Jay, man, listen, at the end of the day, all you got to do is just make sure when you're taking the position, and this is if you're following the scalp strategy, if you're in near term in nature, Jay, There needs to be something I can take my index finger and point to and say, this is why I took the short. I don't necessarily see that for you here, man. You know what I mean? Whether it's in momentum, whether it's an opening range break for the session, okay? In fact, here's your European opening range high. If you break above 89.10, you actually look for a high heading into European trade. Okay? Remember, the opening ranges, just as we do them on a weekly basis, just as we do them on a daily basis, you can also take that approach on a session basis. So within the first hour, hour and a half, 2 hours of trade, you'll see the market set a low, set a high, test a low or test a high, and a break of that region shifts the bias heading into the close of that session. So right now, the opening range high for Europe I'd be considering is right around 89.16, 89.19. You see a topside break above that, you're looking for a high deeper in European trade. Okay? So just make sure that we need something to put us into the trade. You never want to jump into a trade just because or without proper justification. Does that make sense, Jay? He says, you're so right. I need to adhere to discipline. It's all about discipline, man. It's the biggest challenge in trading in general. So I hope that offers some food for thought. Here's a quick note, guys, from the bank research headlines I do want to review with you real quick. It says Citi Economics looking for $600 billion, but recognize that the risk officials may have debated the plan heavily over the past week, resulting in changes. With that said, keep in mind the more concessions are made, the less effective the program will be, increasing the likelihood of further QE iterations in coming quarters. And Mario Draghi is on the horn, guys. He's starting to talk right now. We will see what the headlines are.
The outcome of today's meeting of the Governing Council, which was also attended by the Commission Vice President, Mr. Dombrovskis. Based on our regular economic and monetary analysis, we conducted a thorough reassessment of the outlook for price developments and of the monetary stimulus achieved. As a result, the Governing Council took the following decisions.
Okay,
First,
here we go.
It decided to launch an expanded asset purchase program encompassing the existing purchase programs for asset-backed securities and covered bonds. Under this expanded program, the combined monthly purchases of public and private sector securities will amount to 60 billion euros.
60 billion. Okay, seeing the pound come off, euro come off, Aussie's rather benign, dollar yen trying to press the highs.
2016. And will in any case be conducted until we see a sustained adjustment in the path of inflation, which is consistent with our aim of achieving inflation rates below but close to 2% over the medium term. In March 2015, the Eurosystem will start to purchase euro-denominated investment-grade securities issued by euro area governments and agencies and European institutions in the securities market, in the secondary markets. The purchases of securities issued by euro area governments and agencies will be based on the Eurosystem national central bank's shares in the ECB's capital key. Some additional eligibility criteria will be applied in the case of countries under an EU IMF adjustment program. Second, the Governing Council decided to change the pricing of the 6 remaining targeted longer-term refinancing operations, otherwise called TLTROs. Accordingly, the interest rate applicable to future TLTRO operations will be equal to the rate on the Eurosystem's main refinancing operations prevailing at the time when each TLTRO is conducted, thereby removing the 10 basis point spread over the MRO rate that applied to the first 2.
Okay, guys, so it's going to get rather technical, and I don't want to hold the entire presser here because he will go on for some time. The basic emphasis that we need to keep in mind is this. 60 billion is the number, and as far as the size of the asset purchases will be. Okay, Draghi says the agency debt will be subject to loss sharing. Agency debt will be 12% of additional purchases.
The Eurosystem will make use of decentralized implementation to mobilize its resources.
Okay. It's interesting to see what the market reaction will be here, guys, because $60 billion a month falls short of the $80 billion a month that the Fed was putting in. We'll see if that's the sizable enough. ECB to launch a $60 billion a month private and public bond buying program. Draghi sees purchases by national central banks subject to loss sharing. Says the ECB retains control, coordinates purchases of program. Bond purchases will continue until September of 2016. And the LTROs now to reflect prevailing rate at the time. So they're going to be using that rate more dynamically. Draghi, 20% of the purchase program subject to risk sharing seems to be something that continues to hit the various news wires here. Inflation dynamics weaker than expected. And certainly the whole broader theme of the easing that they're implementing now is to aggressively approach or seek that 2% inflation targeted CPI. So you're seeing the Aussie with some interesting price action, or you're seeing the Euro with some interesting price action here on the 5-minute chart. You know, we got as low as that 115 handle. We're right back at 115.90. So use some caution, guys. Even if you're intraday trading this, for someone like me, I still sit on the lines and let the dust clear. You know, this is sort of wild west trading here. If you're trying to intraday trade the Euro specifically, it's going to move as per his comments on a case-to-case basis. So remember the daily chart that we looked at earlier, okay? The focus is still going to be whether we close below that major key support, 115.32 on a closed basis. This will be the focus. I could see a scenario here where, you know, some more comments come out. This thing slams the Euro even lower to a new low, and then you get a wicked reversal. Again, yeah, it's just conjecture at my point, but we'll see what else Mario has for us as we get through. It says measures to address risks of too prolonged a period of low inflation. Draghi says money and credit developments will continue to be subdued. Economic slack remains sizable, and the potential for a second round effects has increased. Draghi says action will underpin anchoring of inflation expectations. Okay. It says the measures will ease policy stance even further from the ECB's current lax policy setup. So, more or less, I think it's not going to be the earth-shattering event here where they're going to disappoint. They're obviously rolling out the $60 billion purchase program per month. Euro has taken a little bit of a hit here, guys. But remember, from the broader risk sentiment standpoint, equity markets look like this. You still got the CAC 40 up 0.48%, DAX up 0.13, shaving some of those losses we had earlier. IBEX 35 up nearly 1%, and the FTSE MIB Italy's market up 1.44% in the session. Strongest performer so far in the Eurozone. Okay, let's see if this is going to offer us a play, guys, here. If I do take any positioning, I will let you know as we're in this webinar. But in the meantime, feel free to throw out your questions or trade setups, guys. He's going to continue to talk for a while. The Q&A session at the end is really what the main tell will be, so we'll wait for that to take place. Again, the asset purchase program begins in March. There's no change to interest rate as we expected. And again, we're looking at a bond purchase program to the tune of 60 billion euros a month. Draghi says oil prices have strengthened economic potential. Excuse me. Continuing to suggest that the easing oil and energy prices that we've seen is a form of monetary easing in and of itself. So, Andreas, I do want to take a look at the Euro key for you. I do think that the Kiwi crosses in general have been very, very interesting. This is a level that we looked at yesterday. I'm not sure if it was in this webinar, but the basic resistance region we're looking at is 153.72, into 154 handle. And essentially you're looking at the swing low for July, which was the actual 2014 low, okay? And then you're also looking at the 236 retracement. This is from the decline off the highs that you made in 2013 and the high that you made this month, or the low that you made this month. 236 comes right in that region, okay? The pitchfork formation has been holding very well. You can see the highs getting caught there, the lows getting caught, nice pivot on the median line. And as long as you stay above 51.76, I really can't get too excited about getting on the short side of the trade just yet from a scalp perspective. Okay, not a swing trade setup here. I do want to see this hold. You got a couple of features there besides that low and besides that 236. You also have a basic trendline support off the lows they made in 2012. 2013 lows, pivot break, now offering resistance right in that same region. Okay, so for the euro key in a scenario where you see the euro really take a foot off and start to fall off, this would be an interesting trade. I'm not too crazy about getting long the Kiwi. That's my only issue on that one. Looking at the Kiwi dollar, Adrius, this is a major break. It's a major break. You saw a break below 2013 lows. You saw a break below the 2009 high at 38.2 extension. Bottom line, the bearish invalidation level for me now has been brought down to 76.27. As long as you stay sub that region, you're looking lower. So with that said, if you're trying to play a short on the Kiwi, or on the euro rather, Adrius, I'm not sure that euro Kiwi is going to be your best shot. Watch that 154 region. Below that, I'll favor short scalps against that region. But, you're really limited as far as what would turn me a little bit more broadly bearish, and that's going to be this move right here. It needs to break below 51.76 for me to get bearish again. So if you feel like you want to play this range, keep that in mind. Topside break above 54 really invalidates the short side of that trade. Adrius, does that help on euro key? Adrius with an emphatic yes, thank you. You're more than welcome. Here's a quick look, Adrius, also just for your your benefit here. Here's a quick look at the intraday chart for the 30-minute on euro key. I was looking at this one yesterday. Here's the open of the week. So you've made quite a stretch, and I did like the fact that heading into that 54 region, which is again a near-term 1618, you saw some momentum divergence as it came into those highs, right? Price action, higher high, higher high, higher high, lower high, and you actually got a pretty decent trigger break. If you take the low in price, you draw that trigger, you actually just got a nice trigger break there with the move below 53.27. So on a real near-term prospect, yeah, sure, you could probably get away with a scalp against these highs with that break, looking to target this high right here or the median line, whichever comes first. But broadly speaking, you want to use caution heading into this region, right? In fact, let's just see what the ATR on this one looks like. Oh, I don't have ATR and pips installed on this computer, so just one sec, guys. Let's see what the 20-day. Okay, so it's got a pretty healthy range, 200 pips. So about 50 pips per scalp opens it up. Yeah, it's pretty decent, guys. So just keep that in mind, 54 region, and that's the break, the top side. I think you look higher below that region. You just want to use caution with shorts heading into this, 51.20 region, the median line bisector. But that's what euro key looks like for me on the daily here. Okay, some more comments coming out of Draghi here, guys. Just quick recap. I'll continue to give you these comments as they come through. But it says, Draghi, inflation will remain low or negative in months ahead. says risks to the Eurozone economic outlook are to the downside and remain so. Stocks pairing gains after initial positive reaction to the ECB. Draghi, oil prices have strengthened the basis of the economic recovery and momentum. So again, some fluff here as far as the oil prices are concerned. And a quick look at what the equity board's doing. You're still seeing those equities hold higher across the board in Europe. A quick look at the U.S. equity futures markets does see us trading higher as well. I got the Dow up by almost 120 points at this point. S&P up 13 points, and the NASDAQ with a gain of about 24 points here ahead of the open. All right. I do want to take a sec and take a look at the Euro Oz. This is a trade that I was looking at to start off the week. Haven't taken any positions in it, but the focus on was whether we were going to hold below sort of this major longer dated trendline support off the lows that you made. Well, this specific trend line is just right off the lows that you made back in 2013. By the way, to take a quick segue back to the Euro key, if the Euro does rally today, guys, this break above 54 for me would actually really put this in a nice scenario, I think. If you're following the swing trade setups, we are short Kiwi dollar. I think that was a setup we'll be continuing to focus on as well. If the Euro does rebound, it would be a nice way to offset that Euro trade via something aside from the dollar. So Euro key to the upside with a favorable Euro reaction today is something I would be mindful of. Remember, this momentum signature since the start of the week is pretty constructive. Here's the last time we went sub 40 was last week into that low. Break up, 40 hold, 60 break, 50 hold, 60 break, 50 hold, 70 break, right? These are all constructive things. Now, if this trigger gives out and you do see a pullback, I would be using that pullback to offer some, like I said, nicer long exposure there. But if the Euro holds here past or into the open of U.S. trade, I think you have the risk for a nice little rebound here, as long as that 1530 level holds into the close. Dale says, this pair Euro Oz keeps taking my money. I can never get it right. LOL. Well, it's a tricky trade. I'm not surprised to hear that, Dale. Just because the Euro's been very weak, the Aussie's been very weak, and people trying to trade this, it's been who's the biggest loser, right? If you guys recall, I think it was the first week of the year, we were looking for long exposure against this circular region here, highlighted, with 143.85 bullish invalidation. That kind of gave way real hard back here in the 15th. So ever since this day, Dale, I've kind of stayed away from it because I'm like, here's the thing we want to keep in mind, guys. When the market, if you have an opinion on the market and you have a bias and you have a sort of technical layout here, as soon as that technical layout is invalidated, I won't necessarily jump on the other side of the trade. It just means that, my analysis on this level that gave out has me unable to really look at long side exposure. Now, this trigger actually that happened here was actually a pretty decent play, especially with the move back above 41.30. I didn't partake in any of this, just as a disclaimer, but this is the focus right here. In fact, now that we've put in this near-term low and now that we've made a trigger break for resistance, it would be prudent to tack on a quick retracement off the high and see what the levels look like on the upside. If we draw it correctly, same region comes in as target. So 45.48 was what I'd be looking for. Just ahead of that. On a breach scenario, okay? On a breach scenario, that would be the level targeted resistance. Some of these trades, Dale, it's going to take a little bit more patience from our part, man. I hear you. Let's see what this looks like near term, Euro Oz. Okay. Bear with me one sec, guys. As always, as we go through these setups, if you have any questions or trade setups you guys want to talk about, feel free to post them on the message board. We will go through them. I just want to see if this extension off the low actually achieved anything. Hey guys, sorry about the delay here. There's a little bit of a lag on this PC. I do apologize for that if you're seeing a little bit of a jump here. 732. Okay, and that 100's catching low. Okay, there's just a couple of things I'd be looking at. Okay. So one thing you'll notice, once the 1618 extension 143.70 into 143.80 level that we talked about before, this is the 618 retracement of decline, but it's also that swing low we made last week. Okay. And I really wouldn't stress this 100 at this point anymore. So for the Euro Ausdale, I'd be watching those levels, man. Even more emphasis on a break above 43.80 now that 100 is located there, and even more emphasis on 145.50 if we do see that topside breach. For Euro Aus. But this is the structure I'd be looking at right now. I want to see this momentum hold here in 40 on intraday. And you look for a topside trigger, which you don't really have a decent one right now. But all right. Quick here note from Tuttle saying, good morning, Michael. Sterling Kiwi daily. Sure. Let's take a quick look. Right on. He says price broke through the 618 of December to January range, along with the RSI break from the October high. What about a long on a retest of 20045? Yeah. So here's the thing, Tuttle. That is the near-term support. On a scalp basis, you could probably get away from it. You can probably get away with it, but I just want to tell you this. On a stretch like this, I'd be looking for a deeper recovery than just here to get on the long side. Remember, a trade like Sterling Key, the ATR is massive. Again, I don't have my ATR and pips indicator here, so let's just bring up the ATR. So you're putting 235 pips on the ATR, okay? So keep that in mind. I mean, that's like a 50, 60, 70 pip per scalp type of play. So I think you'd look for a little bit deeper of a pull than just 2045 here. But let's see what the intraday looks like. I haven't updated this, so just give me a moment, Tuttle. Let's see if we can get some new levels on this bad boy. Sterling Key. Okay, this chart is rather stale, so bear with me one moment, guys. And let's update this here for Dale. Oh my God, this is so lagged. Okay, you're right. There's the 50% of the decline off the September high is something I'll definitely be looking at. That's just right here. You know what? Divergence into the highs. Yeah, you might have an exhaustion play here in Sterling Key, Tuttle. So here's what I would say. This is the two scenarios I'd look to play this Sterling Key position. Obviously, you don't really have any type of triggers on the 30 minutes, so we'll drill down deeper. But one thing I'd be looking for with this divergence that you're making into the highs, so ever since this reference point, Tuttle, higher high, higher high, higher high, higher high, higher high, all of the subsequent highs here have been lower or even equal, okay, which is still divergence. So as you head into that 20155, this region here, confluence of the upper median line parallel as well as that 50% retracement, you look for long triggers up there with a stop just above to play a little bit of a recovery to the downside here. One other sort of technical feature I'd want to look at is this. See what this extension looks like off the low, and if we've cleared 100 to the high here, also might add conviction of a near-term exhaustion. 1618, wow. Okay, right on. Very clean. Very clean. All right, so here's your area of resistance, near-term resistance, and this is what I'll label as near-term bearish invalidation, which means, you know, once you clear, if you were to clear that 20155 region, yeah, shift the near-term scalp bias or keep the near-term scalp bias in play. All right, and let's see if there's also an embedded fork here that might offer some better price play. All right. I'm not going to stress this one too much. We'll keep it as a dashed proposed formation. Adding value, adding significance, adding further emphasis on that 20155 region as resistance, adding further emphasis on near-term support, which I would designate right around that 9825 level into 9860. Basically the highs that you made here. This is the 100% extension and the buy sector. So this right here would be your bullish invalidation level, and near term this is going to be your bearish invalidation level. Tuttle, does that help? Gert saying if you take the pitchfork line low to the 1601 low, works better in Kiwi, Sterling Key, 1601. Oh, January 16th. He says for the USA. January 16th low. January 16th low. You talking about this? That's it, he says. Right on. Pivot, pivot, pivot. Actually, yeah, you're right. You're right. And this would probably let us put this right at the proper reference point. Right on. Right on. Really well mapped out, guys. I'll post this on the scalp page for sure. Definitely looks very interesting at this point. Tuttle says, thank you, Michael. Very helpful. Right on, Tuttle. Nice eye, man. Nice eye. I like pointing that out here. The 1618 overlap is pretty significant in my mind, specifically on the back of the fact that you have the upper median line parallel there for the formation that's been dating back to the October highs, or even September highs of last year, actually. So pretty big region near term here for the sterling key. Okay, back to the headlines. Euro declines versus yen trades 1% lower. Okay, let's take a quick look back at our majors here. Okay, so Euro's making definitive push sub 115 at this point. I think that's going to lock in that near-term bias. Also, Aussie with a turnaround here. So to take a quick look back at the euro dollar, let's bring this into an hourly chart. And the low hourly close reversals right here, 114.90. So we're making that push, guys. Momentum signature confirms the downside with multiple breaks and failures to hold above 60. Here's a 40 break again for the first time this week. And I think that reaffirms the downside. So with that said, are we going to start jumping in here to the short right at these levels? No. I think you wait for a little bit of a pullback into the open of U.S. trade, possibly into the close of Europe before you start attacking this. But from a scalp standpoint, trying to play this event risk, guys, near term, it's always better off to use a little bit more prudence and kind of sit out the range until you get the pullback. Ultimately, I do think you can set a low on this rally, on this sell-off here. I know that Jamie's looking at similar prospects for the euro, so we'll see. Euro yen. Turn around there. I was talking with this one about with David Song yesterday. I was actually kind of ticked off. We didn't get the stretch into the full 134.50. This is major key support. This is a 2618 off the high. This is the low that you made for last year. And this, my friends, is a nice 100% extension from the decline off the highs that you made right into the end of 2013. So that's not going to be stressed so much for that 100% extension, more so than the stretch low that you made already in October. In euro yen. Okay. Okay, so we can get rid of that. We don't need that. Yeah. So again, similar setup to what we're looking with the Aussie. Reluctant to get on the short side just because you have so much stacked up here, but we'll see if that offers any type of near-term basing or exhaustion low to buy into possibly. Not really too keen on trying to get short yen right now, but that would be the game plan until you get below that 134 level. So that's euro yen. Interesting price action across the board here, guys. You would have expected to see a little bit more or prominent move if the market was going to dump the euro in general. Don't see you're seeing that right now at this point. 114.80 and counting. Crude shaves off all those gains, guys, right back into that key resistance, key support range that we noted early in the year. Remember, 47 to 47.70, for those of you following the crude trade, has been major key support. You did actually get a couple of daily closes below it, but not much. We've kind of been sticking as a magnet right to that 147 region. That's the focus for crude. A look at the gold trade. We've been covering that on the scalp page as well, guys. Pretty textbook from what we expected. So here's the piece from yesterday, guys, on gold. And certainly, where are you? Right here. Okay, certainly the whole premise was to look for this exhaustion move, guys. We were looking for the high rally into 1294. That actually triggered a few days back. I noted that. And we said, you know what, even if you get another stretch, you're probably likely to get capped by that upper median line parallel formation off the lows that you made in November. That's exactly what you got. You ran right into that. We closed lower on the session. Below this region, below yesterday's highs, longs are at risk here for crude. For gold. So a quick note there, as long as you hold below the 1300 level, essentially, we were looking for possible reentry at 1280, and that's actually the dip that you got an overnight trade. Again, I don't actively trade this guy's day-to-day, but I know a lot of you do. So the levels are all mapped out for you right here. 1280 and 1262 possible long entries with a breach above 1320, or a breach above the ML, looking for 1320. And 1320 is a nice confluence region as well, guys. An 88.6 from the decline off the July high, the actual August stretch high, and a longer dated 38.2 extension. All line up right around that 1320 region. Very clean on the gold trade for the last couple of weeks at this point. Questions on gold or any of the crosses that we covered so far? Eileen, absolutely. We can definitely take a look at the pound. We went over Kiwi Yen. Aussie CAD we didn't cover. We can talk about that as well. But let me go over the pound first here for Eileen. So Eileen, the pound has been stuck in this godforsaken range for a very long time. I am actually starting to look for a possible push higher, well above the 158 handle. We were working with this formation for a while, which actually was pretty well suited, but we kind of drifted out of it, really invalidating the use of this as a breakout type of trigger. Here's what the intraday looks like on sterling. So remember last week we put out a scalp report on daily FX, bullish against 51.70 as we broke the opening range high for the week, and you continued to get some nice plays off that. The break below and close below last week on Friday invalidated the long side. This week we opened up the weekly range and we've done jack since. Again, a trade I think could make a push higher. You need to get that break above 52.50 to get this thing running. In the meantime, for a scalper, this is a range, plain and simple. You want to be long into the highs with your limits well below the weekly highs. You want to be short into the lows with your limits well below the weekly shorts. And that's the only way I'd look to play the pound, to be honest with you. I think that pound crosses have offered an amazing opportunity this week. Pound CAD, we've been tracking that one for a very long time. We talked about it early in the session. But not really too keen, Eileen, of playing it versus the dollar per se, because the dollar pullbacks have been pathetic. Here's what the dollar index looks like, guys. Dow Jones FXCM dollar index. Since the start of the year, I don't know what the hell you do with that. Okay, even for a scalper like me, that's, that's not a play I'm necessarily interested in. So trying to be short the dollar, versus the pound, I think you're better off getting some play on some of the other sterling crosses. Now, on a downside break, sub 50.80 on a closed basis, I do think you could try your hand at selling rallies in sterling, selling support trigger breaks and momentum on an intraday and a weekly basis. But until we clear this range, until that daily chart really shuffles out either below 150.80, like I said, or above the weekly opening range high, there's not really a play here for me per se, Eileen. And again, sterling CAD, a trade that we've been following on the scalp log, is something that I'll be focused on as well. Huge range. First of all, I just want a quick disclaimer for those of you who are looking to play this. The ranges that we put in the last couple of days, this singular range was the largest since February of 2013. This one's even bigger than we made yesterday. And I just wanted to bring your attention to a couple of different things. A, this pitchfork formation, which on a closed basis has yet to give out. Okay, so that'll be the focus of today's price action as you head into the close for sterling CAD. And then the secondary focus, if you break up beyond this, right here. Okay, and that takes you up basically into 89.30 or so. So, you know, I actually put out some on SB on this one. We also wrote a rather lengthy amount here yesterday on Sterling CAD. The one thing I just wanted to focus on, guys, and talk to you, I posted the daily chart here as well, is this. Previous price action in this region is going to be sparse, meaning, you know, trying to find and ascertain scalp levels above this region is tough because you don't have anything in historic data for this region until 2008, 2009. And guess what? Even that is just that 1 year's range. This is all the price action you have here. You can go back even further, but there's nothing. You know, we've been much, much higher beyond this region. So my point being this, when we try to scalp, we're looking at, you know, previous historic price action at these levels, pivot points, reaction lines, and the like. Once you start coming into highs that you haven't seen in 6, 7 years, and especially that the fact that we only had a year's span we were actually trading there, makes it a little bit more difficult to scalp. That being said, on the scalp chart, well, first of all, you want to keep this daily in view, which is why I posted it on the intraday page. You want to keep these daily levels in view and these reaction lines. But on the intraday chart, okay, you have a basic 1618 extension here off the low for the week. That's an 88.40 as a soft target I'd be looking at. And then 190 handle would be a big figure. Beyond that, there's really not much till 190, 155. Okay, and this is actually a pretty big level. So Sterling CAD, if we continue to break higher here, guys, you know, you have a lot of room before you actually get any major targets that are worth merit, in my personal opinion. The trade stays constructive above 85 at this point. And those levels are all noted in yesterday's swing log. Questions on Sterling CAD? Eileen says, okay, thanks. Look like it might be a break of the range. So you're talking about the pound. It could, yeah. I mean, the pound is something for me right now. I kind of just glance over every morning just to see if we've made it out or not. It's been a pretty ugly range here. Yeah, but I'd be keeping those levels in mind. Again, if you're newer to the session, guys, do remember you can always click on the camera in the top right-hand corner of your screen here to save a screenshot of anything that you see or any of the charts that we're reviewing here in the webinar. So, guys, that's sort of the levels and the trades I've been focused on this week. To be completely frank, the major trades or the bulk of the trades we've been taking have all been in dollar-yen. Sterling CAD, I tried my hand at it. We took one scalp. I took a stop on the initial break here, back above the 183 level, or what is that? Yeah, the 183 level. So, you know, the other trades have been a little bit more lackluster. The Aussie specifically with the break back below 81.60 put us neutral. Again, we talked about this early in the session, guys. The pullback here still keeps this thing broadly above the 80, 67 major key support that we highlighted early in the year for the Aussie. So not really trying to necessarily play the short side there yet. Sterling CAD, again, the breakout here. If you're not already long, I wouldn't necessarily be chasing it. Look for near-term resistance at 88.40, 88.30 if we do make a break above the upper median power line here. And gold, I'm still expecting exhaustion pullback. 1280 last night, guys, was actually a perfect entry for the long side. You should be getting out on subsequent tags of this upper median line parallel. 1294 was the actual target, so keep that in mind. But a deeper pullback is 1262, 1268, and this is what we're going to reserve near term as our bullish invalidation level for gold. Last but not least, we didn't cover the Aussie CAD, and I do want to take a quick look at that piece. This was posted on Daily FX a couple of days ago. And for us, the 99.27, 99.12 level was where we were starting to look for an exhaustion high. Again, these are really nice setups. The 618 retracement off the high. This is a longer dated 236 retracement. This region also takes into account the July low and that swing high that you made in November right here. We surged right through it. You even got a momentum bounce at 60, keeps the upside in focus. As I noted in the report yesterday, guys, this could be the exhaustion high we were looking for. I don't know. But before I start attacking and fighting, and taking counter trend trades, which this is obviously an uptrend, I don't think anyone's going to argue that with me, I need to see near-term momentum turn over a little bit more, and I haven't done that. So that's a trigger there I'd be watching. That's a trigger there I'd be watching, specifically because it also coincides with the former resistance trigger that gave us the upside bias. Both those confluence right here with the 50. So a downside break, and you would look to tack on a basic retracement. Initially off the weekly low, this is going to be an intraday scalp that we'll take on this week. And that highlights the 50% retracement right at the same exact near-term support structure we highlighted, 9012, 9912, and 9928. Remember, this was the bearish invalidation level that we noted last week. And that's also the 50% retracement. So that's how I'd be looking to play this to finally get exposure on the south side. Other than that, guys, it's a very strong trend. And even the other thing I'd keep in note is even on the daily chart for the Aussie CAD, remember, you're heading into 70 here. If this holds, that would be another conviction that you've made the exhaustion high that we're looking for. If it breaks, forget the short side, my friends, because the thing can stay overbought for quite some time, and the entire time it does, you'd expect to see the thing continue to push higher. So we'll be looking for, exhaustion signs. We'll be looking for momentum on the near-term charts to turn over. Any exposure you take should be against parity 53 or this trendline resistance from the 2013 highs. Brian says, do you watch the bond market, ECB buying Spanish? Thanks. Brian, to be quite frank, I don't, my friend. I watch the bond markets here in the United States, treasuries and the like. I'm not really big on foreign sovereign debt per se. During the sovereign debt crisis a couple years back with the European debacle, certainly that came into focus, and it was a really good way of being able to ascertain broader market sentiment, Brian. But, we're at record lows. 10-year here in the United States hasn't been ever this low in history. So, it's something that I don't really focus on too much nowadays. In the classic quote-unquote risk-on, risk-off environment, Brian, I think those are very, very effective of being, like I said, being able to ascertain the risk sentiment, or broader risk appetite, we'll call it. But right now, it's kind of been a one-way track for all the bonds, so I don't really want to stress that too much. Jay says, still in my trade, Kiwi Yen short, 88.41 is my lower pitchfork line. Hey, Brian, you're more than welcome, man. Great to see you in the room, by the way. Jay, Kiwi Yen, let's take a quick look back there. Yeah, 88.56, 88.65. I guess I'm a little dyslexic this morning. Is the 50% retracement. And there's that targeted zone, guys, we talked about yesterday in the webinar, or talked about yesterday in the report. So, damn it. I hate messing with my fibs. But this is the targeted region we were looking for. So near-term support, okay, Jay? See if you get through that. Okay. The only thing I want to bring to your attention, Jay, was that you're also making some divergence at the lows here, and this trigger is holding. Okay, if that actually breaks, I'd be holding that short position you're in. If you're currently still in the short position, I'd be bringing your stops to break even, taking some off at this region, and if you get the break, the thing could fall apart pretty darn quick. That being said, you have a trigger on the momentum here. 3 tags confirming it as price action pressed into this low. So use some caution there on the Kiwi yen. And also one thing I do want to note here, momentum signature since that low that we've made, or excuse me, since the opening range break for the week, here Jay Jackson, has been a 60-40 complete benign momentum signature. I guess I would say since this low, 60 hold, 40 hold, 60 hold, 40 hold, 60 hold, 40 hold. That's pretty much a lateral market what you want to see. You really want to press this 40 break here to get the conviction to continue to hold a short side exposure there. Not bad. Not bad. All right, guys, and with that, I do hear in the background clapping for the New York Stock Exchange as we come online here for the United States for the equity markets. Keep in mind, today's last scalp webinar for the week. We'll be back on next week, Tuesday through Thursday, for scalp webinars at 8:30 Eastern here in the United States. Also, you do have Jamie, which will be on fixed on Wednesdays at 1 p.m. Eastern as well. Eileen says, thanks for watching through ECB. Jay Jackson, you're more than welcome. Tuttle, thanks for that. Guys, I do want to make a quick note also. We really are interested in your feedback. Specifically from my side of things, guys, the scalp page or the intraday trading page. I really appreciate any feedback you guys have on how the material is displayed. You know, I try to keep it from a trading standpoint the quickest way that you can access these charts and the quickest way that you can quickly reference, you know, what it is we're looking at. Things that are stayed in bold are still going to be significant statements that you kind of want to reflect on as you go through the setups. But if you have any ideas, feedback is always more than welcome, guys, and we'll be looking for that. Brian says, what happened to the ATR ranges? Good question, Brian. Thanks for noticing. So I did remove that off the site. If you find it helpful, guys, I can put it back on. But one thing I want to note with that is that was not streaming, so it was updated manually. And, you know, it's not going to be the latest up-to-date ATR ranges. It's much quicker for you just to kind of jump through your charts and see it. But if a lot of you feel that that was something beneficial for you, by all means, I can bring that back, Brian. So let me know, guys. Again, your feedback is always appreciated. We're looking to get the full launch up running here in a couple of weeks. So certainly any feedback you guys have is invaluable to myself and Jamie. With that, guys, we'll go ahead and wrap things up. I do hope that you have a great weekend. We'll pick things back up. Brian, the periods were a 5-day and a 20-day ATR. The one thing you want to keep in mind is that they don't always change that often. You're typically talking about a swing of 10 to 20 pips on the larger range ATRs and even less on the smaller range. So if you guys think that was, again, a beneficial thing and it really helped you out, let me know. I'll strap it right on there again. It's not that hard. But with that, guys, we'll go ahead and wrap it up for real this time. Have a great weekend. Best of luck trading. We'll keep you updated on SB Squawk. We'll see you next week, guys. Cheers.